Hi everyone, today let's quickly talk about oil, the usual data, the chart, as well as my results for the day and my thoughts going into next year. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So oil had its first decline since 2020 of more than 10%, and I think this is mainly due to the fact that the US is producing more oil than they have in a very long time. And I think this is partially to lower that price, help the US economy, as well as damage the Russian economy, as that is the backbone of their revenue. And we also want oil to stay around that $60 to $65 a barrel area, as that is their cap in terms of exporting oil. And they mentioned that here, so record US production, around 13.3 million barrels per day for the last week. And you can see there's some other players with Brazil and Ghana also putting out record oil numbers. And this is really impacting the price of oil. And we've seen that OPEC is starting to pull back on their production in order to prop up oil prices, sort of artificially. Of course, there are some factors that could drive up the price of oil. We have some escalations in the Middle East. Iran is starting to squeeze those shipping lanes. We've talked about that on the channel before. And so far, none of that has really affected the price of oil. It seems like economic factors are really driving the price and not risk factors right now. So definitely interesting to see. I think this is positive for the economy, and I don't think it's going to stay this way forever. I do think it's likely that oil prices will go higher, and we've talked about that on this channel before. Moving over to the economic calendar for today, you can see all we had was Chicago PMI, which did come in quite weak at 46.9. Forecast was 51. So much lower than expectations, well below that 50 mark. Does show a little bit of economic weakness. We've seen numbers like this for a while now. The economy is definitely softening. The question is, how much softer will it get before we see that first cut next year? Moving over to Max Payne, you can see we did finish right below that 475 mark. We talked about it yesterday, pretty much all week, really. 475 was a lot higher, and we did end up finishing just below it with a little bit of weakness on the day, just by a few pennies. Max Payne did move up today, just slightly up to 473. It was down around 470, 471 yesterday. You can see total options went up a little bit, 2.6 million, and then put call ratio still in that same range. So 480, massive call wall. 475 did move lower, but we ended up finishing below it. Did not finish at the top of the puts, so a little bit weaker on the close. Moving over to the charts, looking at the S&Ps here on the hourly chart, you can see we did sell off today, quite strongly actually. The day was only 0.29%, but look at those first two candles. We got all the way down to the 144 EMA here on the hourly chart, touched that longer term trend down at 473.50. Ended up bouncing pretty strongly into that 475 range. But that is what we expected from Max Payne pretty much all week for the end of the week, and sure enough, that is what we got. And this is what we're looking at in the medium term. We got that left shoulder head, expecting this to follow through a little bit down to that 21 EMA as this rises and as price falls into that range to form that head pattern. Then we'll expect a little bit of a bounce from there. And then once that breaks, kind of the middle of January timeframe, then I'm expecting much lower prices. Moving over to the NASDAQ, similar thesis, fell throughout the session, tested the 144 EMA here on the hourly chart, overthrew it by a lot, got back to these wick lows and wick highs here, down around 407.80, and pinned all the way down to almost 407.50. So pretty weak on the open, but then you can see this pretty strong rally. In fact, let's go ahead and look at that on the 15-minute chart. You can see we double bottomed and then rallied pretty aggressively, overthrew the 21, overthrew VWAP. A little bit stronger than I would have expected, and then we sold off into the close to get below that 475 on the SPY, which did take the NASDAQ with it. So made sense to get into that range. Now we're flattening out, expecting a little bit of movement, and then I would expect a little bit of a rally, at least a double top here, and then we break back down. I am still expecting weakness, so watching 408.81 to the downside. We'll see if that comes to fruition on the Tuesday session, which should be interesting. Again, still expecting a little bit more weakness, so we got a technical down day on Thursday, a much weaker day, almost 0.5% on the NASDAQ here today. Tested the 9 EMA on the daily chart. Again, this looks quite weak. Looking at 405.50 to the downside if 408 breaks. Moving over to the Russell and the Dow. Looking at the Russell on the hourly, you can see we fell throughout the session, broke that first level, back tested it, broke down from there after hours, and we're selling off even more. Down actually quite far, almost $1.50 there after hours, so pretty weak. Looking at the 200 on the hourly chart as your next support. Let's look at that on the 4-hour. Basically nothing to pay attention to there. So 200 SMA on the 1 hour. Let's look at the daily. You can see we are just below that 9 EMA, so pretty weak. Down day yesterday, really strong down day today, 1.63%. Momentum starting to fade there, definitely looks weak. And we'll look at this more on the Sunday video. And then looking at the Dow here, you can see very strong grind up, big breakdown on that first candle. Did bounce off the 21 EMA, still well above the level, definitely showing a little bit of weakness here. Overall, structure still intact on the Dow, and it does look okay. Moving over to Apple and Tesla. Apple did show a lot of weakness today, so we wondered if we were going to be able to hold above this 193.96 level yesterday. Couldn't do it. Got above it again, wicked it, and then sold off pretty strongly. So this does look like a double bottom here. We're still above that 144 EMA here on the 4-hour chart. That's at 191.55. Still interesting to see if we can hold that, if it's going to bounce. Again, the structure is still definitely a downtrend. Got the 9, 21, and 55 EMAs all stacked on top of each other to the upside on the 4-hour chart. Look at that on the daily here just for a moment. Yep, so we're still below all the short-term EMAs. They're not in order yet, so the 21 is still technically below the 9, which is interesting, but you can see strong bearish momentum, strong bearish RSI. And then looking at Tesla, as you expected, we broke that level yesterday, almost tested it here today, pushed very close to our price target, which is this trend line down at 246.50. That's that initial support. Bearish momentum. Next one is 232.50. Moving over to staples and discretionary, we are still in a rotation. You can see staples continuing to go higher, discretionary selling off. Tested that short-term support. Did hold on the day. Still bearish momentum, still bearish RSI. I still expect this to break. Your next one would be the 21 EMA down at 176.17. And then you got 174.76 below that. This looks like a big topping pattern to me for discretionaries, and especially with the move that we've had into this zone, I would expect this to be a pretty big move down. Realistically, once these break, then you're looking all the way down to 166.78 at that 144 and 55 EMAs on the daily chart, which does give you quite a bit of downside. That's about 12 points of downside to come if this structure breaks. Moving over to oil and gas and energy, I continue to watch these. Oil and gas does look weak, not great. Bearish momentum, bearish RSI, but it is right at this shorter term support. You got the 55 EMA sitting there as well at 136.09. And then energy did fall, but did show quite a bit of strength on that second candle of the day on the 4-hour chart. It's up a little bit more after hours. It's still holding my level at 83.55. I do think that we should see a little bit of strength. You also see momentum rolling towards the bullish side on the 4-hour chart, which is positive. RSI, want to see that move higher. It's not where you want it to be to the bullish side, but energy coming through. Oil and gas still looks pretty weak. Moving over to breadth, 20-day average did not move at all. Continues to be right in the same range, right on top of the 9 and 21 EMAs. And then you got the 50-day breadth, was flat for the week, still at a critical resistance. Maybe we see one more spike up to that 92.25 level. We're right here at these peaks that we continue to see markets top out at. Momentum rolling over for a second week in a row, and we'll see if we finally get a bigger step down next week. Realistically, I'm not expecting that until mid-January. Moving over to the dollar, did show a little bit more strength. That's 2 bullish days in a row. Doesn't mean a whole lot on the daily chart. This is still very much a downtrend. But on the hourly chart, rallied up, tested these EMAs, held above 101.25, held above my level. Momentum, slightly bullish. RSI, slightly bullish. Daily momentum ticking towards bullish. RSI, right at the SMA, critical point. Want to see it break through there. And then we could see something like we saw here where we pushed through, got a bigger move higher for a couple of days of bullishness. And then we'll have to see what happens if we can hold that level and then base off and rally higher, or if we're going to break down further like we did here. Moving over to the VIX, here you can see we did rally up pretty aggressive, touched that 21 EMA for a moment, and then we sold off really strong back down to that support level. Support level is still holding down around that 1236 area. This is a shorter term support. I don't view it as strongly as the others, but we're here again, the same place we had on Thursday. Touched that low. We're back at it. Still showing a little bit of strength there. We'll see what happens. Momentum still rolling towards bullish on the VIX, which should signal a little bit of weakness to come next week. Moving over to my accounts, I did fine. I was down about $35 on a day where markets were down about 0.5%. And you can see the IWM was down quite a lot, about 1.5% like we talked about. But all of those losses at this point are being covered by this call that is very, very deep in the money, all the way down at 189. and I might even roll that down if we do see continued weakness next week on the IWM. Again, a lot of protection, $18 credit on that position, down at 189. So realistically, my break-even point on that position is down around 171, which gives me about $30 of protection from current prices. So a lot of protection on that position, not a lot of risk, at least in the short term. And then looking at the Qs, I did take off my shares for a moment. I did put on this put to reestablish it. I should get assigned on those to get my 200 shares back. And then I do have a 1 day to expiration put down at 408.78 for 74 cents, so about $1 lower than current prices. And then I have my 2 covered calls that I continue to play with to protect myself. You can see that protected me from almost all of the losses here today. And then looking at XLE, no changes to this position, made a little bit of money back, even with the price going down a little bit. Still looking to get into these shares at 83.50, but realistically, I'd like this to expire worthless and collect my 93 cents. Let me know down in the comment section what you think of oil for the next year. Will we see oil prices get back up over $100, or is this the new normal for oil down between $65 and $70 a barrel? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.